All right, welcome back. So in this video, we want to break down a couple of things. Number one, the anatomy of the trend. Number two, what to do when the opportunity is present if you're just trading classic trend continuation. Now you know when the opportunity is present, you know where we're going to go. We're going to go to the trade 3BR, but we'll get there after we break down the anatomy. Before we do so, I do want to say a couple of things. Hit the like button, hit the thumbs up, and subscribe to the channel if you're not subscribed so you can be notified when more videos like this come out. The second thing I wanted to say is we've taken a couple of days off of making videos because we need the content that we've made previously to kind of burn through so that it can get out there and people can see it. It wasn't working so well for me to just continue just cranking out videos on top of each other. The YouTube algorithm has a problem. It doesn't know what to do, how to prioritize them, or which ones to send out, so it kind of messes up the algorithm. So I've given the previous set of videos that we've made in the Ultimate Trader Workshop time to breathe and kind of get out there. Now, that being said, let's jump right into it. So anatomy of the trend. So this is going to be a basic workshop, a basic, going back to the basics sort of. I am having to kind of scrunch up so you can see. I could jump back to a higher time frame. I'm on the 1 hour chart. Let's start there. And this is CHFJPY. Okay, Swiss JPY. So looking at this trend that you see here, okay, we're going to break this thing down all the way from the beginning to the end. This is a very, very powerful lesson. Basic, but very, very powerful, so you don't want to miss it. So identifying the trend, but then wondering, how do I get involved in it? How do I enter? Okay, so we're going to talk about that. But let's do something first. Let's take a line tool and let's start drawing out what happened and going over some of the base principles. Let's call this the starting point of the trend here. Okay, this is the starting point. Okay, so you also want to get used to using the correct terminology and not just saying things. Everything has a correct phrase or name that goes to it. So this is the starting point of this trend. Okay, this right here is the initial high. So starting point, initial high. And if you want to know more about trend continuation, I do have a class on that. It's kind of like our basic beginner class at the beginning of the Harmonic Trading Academy playlist. But this is the starting point. This is the initial high, okay? Then you get your outside return or retracement or pullback, whatever you want to call it. The correct term is your outside return or OS, okay? Outside return. And then, okay, you come up here and you finally get a new structure high. So you had starting point, initial high, outside return, new structure high, okay? And then you get another outside return, okay? You don't get a new structure high here. It's just a retest. You just get a retest. You don't get a new structure high. You don't get H3C, higher high, higher close with the H3C principle, okay? But you get a retest of it. Then you get another outside return. Remember, we're looking at this trend and breaking down this trend. Then, so you didn't get it this time, but here you get new structure high. You did not get new structure high or higher high, higher close, but you get it here, okay? Telling you, okay, the trend is going to continue, all right? Then you get outside return or retracement, correction, pullback, and then you get new structure high, okay? So coming back here, initial high, starting point, initial high, outside return, new structure high, outside return, equal high, retest, outside return, new structure high, outside return, new structure high. So you're creating these higher highs in a trend and you're creating higher lows in a bullish trend. This is a bullish trend. I should have said that. Then you get another outside return, which brings us to where we are now, where there might be an opportunity that we're going to talk about. But before we do that, I might as well warm you up to what's happening while the trade is trending or while the trend is going on. So let's just come a little bit closer. Now, this is why classes like Mastering Fibonacci in the Harmonic Trading Academy playlist are very helpful to understand this. So if you want to understand a little bit more about what I'm doing in this workshop here, you want to go to the Harmonic Trading Academy playlist and look for Mastering Fibonacci. The other one is Fibonacci and the A to B is equal to CD pattern. So we have two of these classes in the playlist. You should go check them out. By the time you're done with both of those, you'll probably be a master in Fibonacci. You'll really understand Fibonacci, advanced Fibonacci, tools, retracements, extensions, inversions, etc. But let's take a look at this point right here where there was an opportunity. Okay, remember, I'm only bringing you here first so we can talk about what's going on currently. Okay, remember, or maybe you don't, but there's a couple of things that you want to look for. You want to look for at entry. It's not going to be your defining factor, but it's going to be a part of your combined technical score. How far was the retracement? Did the retracement equal or test a major Fibonacci level? In this case, the answer is going to be obviously yes. This looks like it's going to be a a test of the golden ratio 618 retracement. So I'm going to grab the Fibonacci retracement tool. I'm going to come down here, what you would call the swing low, and I'm going to measure from the swing low to the swing high. Remember, when you're using the Fibonacci tool, it's always wick to wick, the lowest low to the highest high. Or if it's vice versa, if you're measuring a correction that's coming back up, it's going to be retracing from the highest high is your swing high to the low wick is your swing low, and then your range is going to be on the way up in there. But this one right here, you can see I brought on two of the major levels. You see 618 and 786. What did you get? Where was the reaction? Okay, of course, it's at the 618 golden ratio. That's why. It's pretty much how it works. It's that powerful. You just happen to get a reaction out of there. And even though we don't get the type of confirmation on entry that I would like, it still would have been a profitable winner. Okay, don't worry, we're going to get up to current date. You guys want to see what I'm going to access to all back tests. So we don't get 3-bar reversal, but you wick down, you test it. You do have bullish divergence down there showing you, okay, it looks like this thing was flying downhill, but it's actually gaining strength. Very, very good. And then the trading opportunity would have been something like this, okay? First, the trader would have had to go get his targets. So we would have grabbed the extension tool for targets on a trend. And we would have measured from swing low. Oops, wrong. I want the extension tool. And we would have went from swing low to swing high. Okay, and we would have been looking for the 127 extension. This one's going to be kind of crazy because shockingly, we didn't make it. But hopefully the trader would have managed the trade. I'm going to grab the long short position, and I'm going to say we would have entered like when this blue candle closed here. I'm going to say we would have entered when this one closed, and we would have targeted the 127 extension. Now, again, this one did not reach it. It would have been a profitable trade that would have been at risk if the trader did not know how to manage it, okay? With stops below the wick, I don't think any trader would have completely blew this thing up and lost. I'm pretty sure they would have been managing this up, okay, along the way. This would have been a 2-to-1 risk versus reward. I just wanted to talk about the entry in the trend because that's where these opportunities are going to be present while using the Fibonacci extension to extend for targets. Okay. Now that brings us to where we are now. Okay. So again, that brings us to where we are now. Hope this can be seen. I'm having to scrunch up a little bit, but hopefully not too much. Okay. So doing that and knowing that we're in the middle of a trend, you would say, okay, I want to be able to take advantage of that at some point. And good thing is the opportunity is actually present. So I'm going to ask that you backtest this in a paper account. Okay, don't do it on your live account. Do it on a paper account. And then I want you to continue to start applying some of these principles, backtest them for yourself, because what I do is something different. You have to learn how to do these things. Take some of the things that you learn over here at the Harmonic Trading Club and make them work for you while still trying to conform to the rules. But we know that there's got to be something there, okay? Like what's going on? Remember I talked about that 618 retracement, right, on the first leg. So you kind of get the same thing here. You see where the market kind of went flat and consolidated here? Okay, before he then took off. Okay, so he consolidated for a while, decisions had to be made. He took off, established a new high, comes back. It's going to be decision time again. But again, of course, what we want to do is measure that correction. How far you should be always asking yourself, how far is the correction? Is it at a major Fibonacci level? Your trade is not predicated on that, but that's just a very, very solid piece of information you need. So Looking at this area here, the current set of price action that took place, we're going to go to the low right here, from the low to the high. And we want to say, what did it retrace to? And I'll come closer. And again, it's the same thing. You came down and you tested into the 618. You didn't get as far as the 786, which is good. You wanted to stay in that 618 range. Okay. One of the things that I did when looking at this before I made the video was I said, let me jump up one time frame. So let me go 4 hour. Okay. Let me go 4 hour and see if that looks any better. And on the 4 hour, it looks like it really just tested that 618. You come down with the engulfing candle and you probe into it. Then you kind of got like a hammer candle, but then you got like a doji candle. So there's a lot of decisions being made, and you actually want to see that. The whole thing about all of these immediate reactions and these quick payouts, you got to get that out of your head, okay? Because typically that's not the way that the market works unless you're on like a 1 or 2 minute time frame trying to scalp the market and probably just getting whipsawed and snapped all over the place. Like as soon as you place a trade, it closed out loss, okay? Unless you got your stop, unless you're just doing an unreasonable stop loss on a scalp. But typically, this is like what you want to see when the market is making a decision or having to turn, okay, to go the opposite direction. It's not going to stop, we're just going the other way. Unfortunately, the truth is the market doesn't work like that. It works like this, like what you see. So we wanted to jump back to the 4 hour just to take a look and see how much went into our 618 retracement area. Not too bad. It's exactly what we want to see, a test of the area, not dipping down, not going all the way through 786 or any of that stuff. Okay, so that allows us to come back to the 1 hour, to our trading time frame. Now we say, okay, we kind of got what we want. We got a 618 retracement. That looks good. You then look down at the RSI and you see that it was oversold. See the red in there? You see the RSI is oversold. That's good. And we use a pretty extreme measure. We don't use the out of the box 70-30. We kind of tweak that a little bit more and compact it. And we use an 80-20 to say, I only want the extreme overbought, oversold condition. So that's under 20 on the OBOS, under 20. And then you see, is there bullish divergence? Does it look like this is trying to come up out of it? Okay. That doesn't mean that we're trading off the RSI. We're just using that as just a point. We're just giving that a couple of points to say that is helping increase our combined technical score. We got a 618 retracement to a major level. We got RSI oversold. We got some bullish divergence on the higher time frame. We got higher time frame confirmation. So things are looking good. Okay. And then ultimately we come to, okay, what does our opportunity actually look like? Now, remember I said, this is something I want you guys to back test, and I'm going to talk about it. Okay. So now let's go and see if we will be able to do our thing. And that's the trade 3BR reversal, the trade 3BR. Okay, the trade 3-bar reversal. So you guys should be very used to this at this point. Okay, bearish engulfing candle, followed by doji. Okay, and then followed by triggering an entry. We need to close above the doji. That's our confirmation. Okay, and our entry is when it closes, which is here. Okay, so one more time. Even though I've said it 1,000 times, this is the trade 3BR or the 3-bar reversal, but it pretty much belongs to me at this point because I'm the one that's letting the world know, hey, listen, this is how you can approach the market, and you got a pretty high probability of being successful. And I'll talk about the rest that goes with it as I do in the rest of the videos. But bearish engulfing candle, followed by doji, followed by trigger bar and entry, closing above the doji. So our conditions are met and all the other good stuff that goes along with it. Remember, I've talked about the psychology that has to come into play because for whatever reason, whatever the phenomenon is, once that's achieved, one of two things happen. One of three things happen, okay? You get the pullback or retracement, and it's usually back into a couple of spaces, a retest of the close where you would have entered, okay? Sometimes, here's option number 2 is down to the doji. That's where the real structure was created. Option number 3, there's actually going to be 4 options. Option number 3 is, oh, you got faked out and none of that meant anything and you just lost, okay? And option number 4 is if none of those things happen, you start to move towards profit. Okay, those are the 4 things that you should look for. This is the psychological phase of the trade because remember, we entered at the close of our trigger bar, okay? Price came up. Trader's happy. Oh, it's working. I'm in profit. But he took it right back, even to the point we might be underwater, okay? So, but looks like I told you, support is then created in that area. So let me draw that out around our entry and our doji, okay? So some support is then established typically in this area if you're gonna win on the ones that win, and that whatever the percentage is, 65%, 75%, 80%, it's just a mixture of it. But very, very probable for confirmation, especially with the rest of the stuff that we put into it. So you see, even currently right now, there's a little blue little wafer candle. He's trying to make his way back up to stay in this bullish divergence. Okay, so we're basically looking at an opportunity to get involved in this trend, okay? And then what we can expect, because we don't know anything, we can't predict anything. All we can do is prepare ourselves like this. So you got to get all that other stuff in your mind. I know we don't know anything. We can think, we can project. All we can do is do the work. Whatever happens after that, we can't control. So looking for a retest of the high here, okay? And then looking for an extension, but the extension is going to be different because remember, this was a higher high, higher close, okay? And then the pullback. I'm going to jump back to the 4-hour chart one more time because we want an extension that is based off this entire trend, okay? We want an extension that's based off this entire trend from the low right here to the high up here, okay? So grabbing the Fibonacci extension tool, starting from the low to the high and coming back. There's 2 numbers we're going to be interested in, okay? There are the 127. Come on. There are the 127 extension and the 1414 extension, okay? And if let me come back to our trading time frame, which is the 1 hour. If we entered at our trigger bar, the confirmation of our 3 bar, and we grab the long short position, our projected target on this trade would look like this. And we're going to go aggressive on the target too. Typically, it's the 127. We're going to target a little bit higher on this. We're going to say 1414. Okay. Our stop goes below the 3 bar reversal. Okay. And you can go as tight or as loose as you want. Basically, what we're telling the market is if you come down there and test the price after in this case, our doji, you have invalidated our setup and we lost. And we're okay with that because it's so small. The risk versus reward on this trade, as I have it set up right now, is 16-1. Almost unreal. So yes, the market makers are hoping that this doesn't play out. They're hoping that the volume and the momentum and the conviction from the buyers who are bullish on Swiss do not arrive. If they do, we should be okay. Could be, or could not. Oops, sorry. Let me go back. So let me just move this over so you can see how powerful and beautiful of a trade this is. I would suggest that you could still enter this. Like I said, paper trade it. Don't put this on your live account so that you can test it for yourself. It could go either way. I'm not saying what's going to happen. Okay. All I'm saying is we've done the work to identify a very profitable trading opportunity with a 16-1 risk versus reward. I mean, you just got to take that 7 days out of 7 and twice on Sunday. You know, that's just how it is with something like this. You're rarely going to see something like this. People struggle to find 2-to-1s. Over here, we're able to do stuff like this to find 4, 5, 6, 7, 8, 12, 16. Okay. So hopefully we got it all. We broke down the anatomy of the trend. We talked about the pullback, the correction, and the opportunity. And looked and noticed that there actually was an opportunity to get involved in it, understanding what it's going to take, what we can expect at least in the form of a pullback that'll make some traders nervous, understanding that the psychology has to be tight to get through that, but the opportunity is there. If you take a loss, it's not going to hurt you at all. It's 21 pips versus 680. 680 pips versus 21. Come on. So, I think that's it. Remember, hit the like button on this one. Hit the thumbs up on this one. I think that a lot of traders could really see this because we were able to break away and get away from the advanced stuff. A lot of the harmonic patterns and stuff like that. There could be some in here. I'm not gonna take you down that path right now. But definitely, let's see what happens and track it. Come back, leave it in the comments. Hey, Trey, that loss, you suck. Whatever, I think that'd be a good thing to do because you're here. You can actually take it. It doesn't matter if we missed it. We're on the pullback. So in essence, you would not have even had to go through the get in 1, 2, 3, 4, 5, 6, 7, the 8 hours of agony. You would have had to avoid that, and then you can see what happens. As I said, price is going to pull back to that area, which should become a level of support. You need traders to come in, volume and conviction, and then that's when and if this thing happens like that, it will happen. So that being said, guys, head on over to the Harmonic Trading Academy playlist where we teach all the things that we talked about in this video in great detail. 3-bar reversal, trend continuation, Fibonacci, RSI, how to enter your trade. We got classes on all that stuff, as well as all the amazing, fun, advanced pattern stuff, all of them at Gartley, Bat, Cypher, Shark, Crab, A to B is equal to C, D, double tops, double bottoms. What else is in there? Head and shoulders, you name it, okay? All here free on the house at the Harmonic Trading Academy and the Harmonic Trading Club. So get us on the thumbs up, subscribe to the channel if you're not subscribed, share the video if you know anyone that this can help, and we will see you guys on the next video. Be good, take care of yourself in the market, and we'll see you again. We'll see you later.